Los próximos minutos, nuestro siguiente invitado, tenemos el placer de saludar a Según Pelosky, CEO en TPW Advisory. Hello.
Hi.
My fair question, did anything in the Fed minutes surprise you?
No, I think it was pretty standard, and the Fed made it pretty clear that their view is that tariffs and some of the policy decisions the Trump administration are making are negative for growth and bad for inflation. And so I think that's a combination that, as the previous guest was just discussing, is problematic for the Fed in terms of providing the Fed with room to maneuver, should it need to do so.
What do you think of the focus on rising inflation, which we haven't seen yet, and the weakening labor market?
Yes, that is exactly the concerns the Fed noted. And I think it's worrisome because if you have rising inflation, then it's difficult for the Fed to cut rates. And if you have weakening employment, that's when the Fed would like to be able to cut rates. So what is worrisome is the scenario that the Fed is painting is one where its ability to act to weaken or to mitigate the effects of a weak labor market is not going to be very robust. And so all that suggests to me that the upside for U.S. assets, particularly for equities, is pretty limited.
What is your perspective on the Fed's behavior in the coming months?
I'm sorry, my perspective on what?
Your perspective about the Fed's behavior in the coming months.
Yeah, we don't think the Fed is really all that important right now. The Fed is really last year's story or even the year before. Today the story is fiscal policy. And the U.S. no longer has much room for fiscal expansion. And even with the efforts to have a further tax cut by the Trump administration is probably going to lead to higher interest rates and have a very little stimulative effect on the economy. And over time have a negative effect in terms of higher rates, weaker growth, and most likely a weaker dollar. But the real issue, in our view, as we think about the global markets, is that the fiscal space that the U.S. had post-COVID, in which it used aggressively to stimulate the economy, A, no longer exists in the United States, and B, has moved to Germany, for example, in Europe, and to China, for example, in Asia. And so when one thinks about the opportunity for global equities, for example, the opportunity set is moving away from the United States to Europe, to Asia. And at the same time, the bond bear market, which has been the case in the U.S. for now going on 5 years, I believe the longest bear market in U.S. Treasuries in perhaps 100 years or more, is also migrating to Europe and to Asia. And so we see rates rising at the long end in Europe. We see rates rising at the long end in Japan. And all this is due to the fact that markets are understanding that governments are going to use fiscal policy to build defenses in Europe and in Germany, and to stimulate consumption and drive economic growth in Japan and China. That's really the story. The story is not the Fed, it's really not central banks outside of the emerging markets where central banks have the opportunity to cut rates because the dollar is weak. So Brazil, Mexico, etc., can now cut interest rates without worrying about their currency collapsing. That's a major difference than prior crises in either 2000, 2008, etc. In this environment, emerging markets can cut rates to stimulate growth, and that's one reason why we like emerging market equity.
A little thing about dollar. The Fed also warns of the danger of a weakening dollar. Do you agree?
Yes, we feel strongly that we're at the beginning of a period of capital repatriation out of the United States, back into Europe, back into Japan, back into Asia, back into emerging markets. The U.S. for the last 4 or 5 years has been the place to be in terms of stocks. Think of U.S. technology stocks, etc. And all the capital, or not all, but much of the global capital moved into the United States to participate in that growth, pushing up the value of the dollar. That is all now starting to unwind as people realize they're overinvested in the U.S. at a time when the uncertainty in the policymaking of the U.S. is at record highs. And two things that don't go together, record high valuation and record high uncertainty. And since the uncertainty is a feature of the Trump administration, it's going to stay that way for years. And therefore, the dollar and premium valuation of U.S. equities, for example, is going to decline. And so we think the dollar is at the early stages of a significant weakening period that will provide a tailwind for the outperformance of non-U.S. equities versus U.S. equities, which is a leadership change that we haven't seen in the last 15 years. So the Fed is not really the story. The story is what's going on in global capital markets, what's going on in global currency markets, what's going on in the fiscal space in Europe and Asia. Those are really the things that are driving and will continue to drive for several years, we believe, the capital markets around the world.
Okay, my last question, what are your expectations about NVIDIA's results?
Well, we don't, thankfully here at TPW Advisory, we only focus on ETFs, so we do not do single stock selection. Having said that, one of the things we believe very strongly in terms of thinking about global growth, economic growth over the next several years, we believe in a global growth long cycle, as we call it. And that long cycle is being supported by spending on AI and on climate and on defense. And the spending in those 3 areas, all of which is existential, must have AI, must mitigate climate risk, must have defense. All that spending is what underpins the global economy. And NVIDIA, being a semiconductor chip company, is going to benefit from the continued demand for AI power and AI capability. And really the very interesting investment opportunity as we see it is the combination of AI and renewable power, because AI requires tremendous amounts of power, and the only potential source of that power in the next 3 to 5 years is renewable energy. It's not nuclear power, it's not natural gas, it's renewables. And so that is really an area of interest for us as investors.
For my last question, but today is NVIDIA's day.
I'm sorry?
No, sorry for my last question, but today is NVIDIA's day.
No, of course, yes. Everyone's waiting anxiously for the results.
Yes. J. Pelosky, CEO and TPW Advisory, thank you for joining us. Good afternoon, good night.
Good night, good afternoon, goodbye.
Good luck. Pues vamos con una última hora, 2 últimas horas. Una nos llevan a los avances en las negociaciones entre Rusia y Ucrania con la intermediación de Estados Unidos, y precisamente de esa intermediación queremos hablar porque se ha producido hoy por la tarde una conversación telefónica entre el ministro de Asuntos Exteriores de Rusia, Sergei Lavrov, y el